Good afternoon and welcome to our Small Business Owners Bootcamp webinar. My name is Asia Blue and I am the Marketing Manager at Bernstein Financial Services. I'm so glad that you were able to come in today and participate in our workshop. Bernstein Financial Services is a full-service accounting and tax firm. We help business owners meet their financial goals in their personal and professional lives. Mike Bernstein has been the owner and president of Bernstein Financial Services since 1989. He has a BS in Mechanical Engineering, an MBA from UC Irvine, and he also became an enrolled agent to practice before the IRS in 1987. His partners, Anna and Rachel, who are also helping to facilitate this webinar, have worked at our firm for nearly 2 decades. You are invited to schedule a free consultation with Mike, Anna, or Rachel for tax support, business consulting services, or bookkeeping. You can schedule your consultation on our website by going to bernsteinfinancial.com. Without further ado, let's get started. I'm going to pull up the agenda.
So we'll get started, and I have a timer going, and Asia Blue, Anna, and Rachel make sure I don't get behind or too much off schedule, because everyone's time is important. So you can take the agenda off now, and I'll just work from the one I have I'm looking at so you guys can see me. All right. So the first category is keep your numbers up to date. And proper tracking. So proper tracking of income, expenses, and liabilities. Now, some of you, if you're a small business, you may not even do a set of QuickBooks or an accounting, but you should, even on Excel or something by month. But most of the firms that are going to be benefit from this presentation are going to be doing a set of books. Either they do it themselves or they have somebody else do it. You should be tracking the income, expenses, assets, and liabilities, obviously, and they should be completed timely. What good is it doing the books if they're not timely? Well, what's good is you give them to Mike at the end of the year so I can do the tax return. But really, books are really meant for management control and management feedback. They should be done at least monthly. They should be done not too long at the end of the month being done. And possibly most of your businesses need interim information. And I call them key information reports. So you should be getting a weekly report of cash available, payables, receivables, and things like that, interim, so you can manage your business well. The financials tell a story, and you have to understand how to read them. That's a whole nother presentation, but you should be learning how to read them and what they tell you about the path your company is taking during the year and when you need to take action on something. You can use separate Excel or other systems to extract information from your books to give you these reports. And I have examples of these reports that I've prepared for other companies so they can look and synthesize all the information a little more easily. That's category number 1. So we're on to number 2. Understand your numbers. There's revenue, there's gross profit. Now, some of you don't have a gross profit because you're a service company. You just have revenue and it goes right down to expenses. But if you're a construction company, you might have cost of goods sold. If you're manufacturing, you have cost of goods sold and produces a gross profit. Then you have your deductions, and then, of course, your net profit. Then what you need to know is the sensitivities on all of those areas. And we're going to be talking about that later on. But understand what is in revenue. If you have 3 revenue streams, have 3 revenue categories. If the deductions are all combined too much, you need to separate them up. So you understand the sensitivity of how you need to look at your financial. And finally, Asia Blue, I'm going to ask you to bring up the forecasting spreadsheet. I don't know if this is on our website, but we have available a forecasting spreadsheet for businesses. And what it does is I use the same one, and I've used it for many, many years, is you forecast you put the actual in the first column, you forecast by month, the next 12 months. And then to the right, there might be 2 more years. The far right, maybe in column O, I don't know if you can scroll over there, see 2 more columns. So the second and third year you do by year, not by month, because it's hard enough to forecast 12 months in the future, let alone 3 years in the future. Now, most people don't do forecasting. I would say probably 10% of businesses do forecasting. They feel it's too hard and they feel it's not accurate. That's not a good reason not to do it. You should do it because it tells you something about where you want to go and what you want to do. And you can revise it during the year. It's not in stone. You should be doing forecasting. Thank you, Asia Blue. You can take it off now. If you want this forecasting spreadsheet, we can certainly make it available to you. Number 3, making changes when something is wrong. So this is what we're really after. Either your gross revenue is too low, your gross profit's too low, your net profit's too low, right? These are the things that you want to fix. Very easy to say what they are, but let's talk next on what to do to fix them. And number 4, 5, and 6 are exactly that. So number 4 is take the right work whenever possible. So we think about the revenue, making it more. We think about trying to reduce deductions and things like that. But do you spend enough time making sure the work you're taking in is the right work? So, as an example, let's say you're a construction company doing residential improvements. Do you take every improvement that comes around, no matter where it is, no matter what the size is? No, you probably have a thought process. This is what I would like. Well, write it down. I'm a residential improvement company, construction company. I want jobs from $100,000 to $400,000 gross. That's my prime area that I can do a lot of good work on. And I want them in the LA area, and I want them time and material. So that might be your scope. And that's the ones you go after. You do your marketing based on that, and you try and get those. That doesn't mean you don't accept other work. That means that's the work you're going after. And if you don't let yourself know what the work you want and try and go after it, you're probably not going to get a lot in that area. Okay. So this means that you might need to turn down business, believe it or not. So if you get something outside of that scope, should you turn it down? And it depends whether how busy you are. It depends on the margins you have of the current business and that business. But you should consider not accepting work outside your scope, because if you accept work outside your scope, it may make it so you can't take work inside your scope. And that creates a problem. You're hiring people to do work that you didn't really want to do. Okay. So when to take it, when to not, that's a whole nother discussion. And you have to analyze your current cash flow, your current revenue model, and what work is coming in and going out. Okay, number 5, debt consolidation and credit availability. It's a short one, but it's really important. A lot of businesses, especially these days, struggling, have to take on debt. And even ones that don't struggle take on debt. You should be making these relationships with banks and loan companies in advance of when you need it. Have it available. Because when you need it, you may not qualify as well. And in times when you qualify well, you can increase these limits. You can improve the rates that you get it at. So make the relationships when you can. And then if you have to take on debt, continuously look at it to see if you can get some other debt to replace it, especially if you had to take a very high interest loan to handle it. Number 6, increasing profit. So this really gets down to the crux of it. What do I recommend to try and increase your profit? So it's not magic. It's hard work. It's rolling up your sleeves in the most case, but understand how many different ways there is to make more profit. I listed down here in my notes, higher revenue, higher gross margins, lower deductions, look to every section. That's quite obvious. Let's go to the easiest one that people go to first, deductions. You go through your deductions, you realize, wait, I didn't need that expense. I didn't use that last year. I should get rid of it. If you don't go look and review it every 3 months, every 6 months, you might have things on there that when you were doing well, it got bloated and you don't need. You should get rid of those. But most of the concentration that isn't done and should be done is on revenue. And the first thing I'll talk about is prices, volume, and gross margins. So pricing. Sometimes you don't need additional business to get more revenue. There was one company I consulted with recently, and I said, when is the last time you raised your prices? And the owner said, and they do about 10 million a year. And they said, I think it was 3 years ago. I said, well, why haven't you been raising your prices? I don't know. I thought maybe we'd lose business, so I didn't. I said, well, if you would have raised your prices 3% per year for the last 3 years, roughly 10% over 3 years, right now you'd be doing $1 million more. Do you think you would have lost $1 million of business by raising your prices 3% per year? She kind of nodded her head, said, no, probably not. I said, well, you can always try it on a segment of your business and try it out, see how it works out. But this is the fastest way to increase your bottom line without increasing any costs or changing anything else, just by price increases. Don't be sure to review them. Next is to get more revenue. So this has to do with maybe marketing, which I'm going to talk about in a few minutes. Okay. The next thing is the business you take on. Can you get business that's more in the scope that you do better on it? And if you do better on it, you might have a gross margin that's higher. so that you can contribute more to pay deductions. So the business you take may help to increase that profit just by taking different type of business. Now, sometimes I recommend you lower your price. So if it's a very commodity item that you are offering and the competition is hard, would you be able to lower your price by 5% and get enough extra business to overcome the lower volume and the lower margin in that case, but you have a higher volume of business and you can still do better? So that you shouldn't move out of your thought process and keep in your mind. So let's move on to marketing, because this area, I think a lot of small businesses don't do very much. And when they do it, they don't know how to do it, where to do it, how much to spend. And I've been guilty of that for the first 25, 30 years of my business. It's called organic growth. That's what I let happen. Someone referred somebody, someone came to me, asked my prices. I took them on, seemed to grow at an okay rate. Everything's good, right? No, 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 because you're not getting the client that you wanted. I love all my clients, but that might not have been my sweet spot scope. Okay. So if I would say the sweet spot scope and take those clients, maybe my profit would be better. Okay, so it depends on the design of your company and what you want to do. But the point is that if you don't market and you don't try and get those clients, you're not going to get the ones you want. It's going to be all over the map. So what should you be doing in marketing? How much you should be spending in marketing? I found on average, when business actually do marketing, they're spending about 2 to 3% of their gross. Okay, so that means 20,000 for every million. So if your firm does $4 million, you probably should be spending somewhere between $50,000 and $100,000 in marketing. And that might be spread out. It might be spread out in different segments of marketing. And we're not really talking about marketing. I could spend an hour on marketing, right? Okay. So that's important to do. And then really important with marketing is you got to start. It's really hard to find the right people. You're going to waste money at first until you get the right marketing. You may have the wrong person doing the marketing. You might have the wrong medium. You may have to dodge and weave to change it. And you may not get new business for 6 months. That's the way marketing is. Then it may really be really good, and then nothing's coming in, and you have to change your marketing program. It's really very difficult to navigate, but if you don't try it, you're not going to get into it. If you don't try it, you won't learn what works and doesn't work. Really important to start doing it. Okay, we're going to move on to number 7. I think we're moving on just right. Uh, Anna and Rachel, are any questions you germane to what I've covered so far that I need to answer?
Any questions can wait until the end for right
Okay,
now,
very
so you
good.
can keep going.
Thank you. So I'm on number 7 now, pressure on the business from personal financial needs. What do I mean by that? So let's say your business is doing very well and you're making $500,000 a year in your business. That's really, really good. And you're going to succeed quite well with that, unless your personal expenses are 600,000 a year. So I have clients that do very well and they still have trouble with their business because they're drawing too much out of their business. So is that a business problem or is that a personal problem? Well, maybe the person thinks the business problem because they should make 800,000 a year. Well, that may be the case, but if they aren't, we need to revise the personal. So your personal financial health is as important as the business financial health because you have to flux it with the business. Sometimes this happens when the business does well and you start expanding your personal spending habits to match the business, and then the business doesn't do as well and you can't flex down on the personal. So it's important to match those up and make sure you don't put too much pressure on the business, because you could end up hurting your business, causing problems with clients, causing problems with workflow and cash flow, just because you're putting too much pressure on it. And we discussed something in number 8 about that. And number 8 is cover the big 6. Now it's personal again, but it affects the business. And this is why I'm very big on people handling their personal financial and cash flow needs at the same time as doing their business. So let me explain. So I've written a book, and the book you'll see that Asia Blue is going to send out to everybody in a digital copy is The Ultimate Plan, The Ultimate Guide for Planning Your Personal Finances. Looks like that. Me on the back. It's not that long, 10, 12 pages per section, and it covers cash flow planning on the personal side, retirement planning, insurance planning, estate planning, college planning, and tax planning. So those 6 areas, if you cover in your personal life, will make your personal financial healthy and move the right place towards retirement. I'm going to add a 7th one for this presentation, and that's succession planning. You might think that's a business item, but it's really a personal item. And I'm going to talk about that most because on those big 6, cash flow planning is important. Obviously, if you're negative cash flow, it affects the business. Okay. Uh, Obviously, the retirement planning is important for your personal insurance planning. We'll talk about it in a moment, but you need life, disability, long-term care, health insurance, and you don't have those right things, it could affect the business. And I'll show you that in a moment. Estate planning. Do you have a revocable living trust or other planning in place to handle your personal needs? So succession planning. Let's talk about succession planning. So let's say I'm a partnership in a real estate partnership, and there's one other partner, and I should pass away or become incapacitated. What happens if I'm running that company? Who's going to run it? Is it planned in advance? Do they have the right authorities in place to do so? Or worse, what if I die? Are they now in partnership with my spouse or kids? And it was at the plan. So you can do a cross purchase agreement to make that happen so that it doesn't, my side gets bought out by the other side. These are really normal processes, but they tend to be ignored by business owners because business owners are too busy fighting the daily fight to run their business than taking care of all these plans that need to be done just in case. So succession plan is just not about dying, but it's about moving your business to the next generation, or selling it to another generation, or selling it to a team member, or gifting it to somebody, or winding it down later on. But if you don't last till that date, you have to have a plan in place. And this is succession planning so you don't mess up the business. A good business with no one to run it and no plan causes a problem later on. The last, on that matter, Asia Blue, would you bring up the personal planning spreadsheet? So we also offer a personal planning spreadsheet similar to the forecasting spreadsheet, and it helps you organize your personal finances. And it has 2 parts to it. One is the cash flow, money in, money out. Most of the money is probably coming from your company. And the money out are the expenses. And then that's the cash flow portion. And then there's a second portion that covers assets and liabilities. And that just shows the equity in your life. And that equity will indicate how close you're getting towards retirement, if you built up enough equity, and that affects how much insurance you need as well. So Asia Blue, when you get that, you can bring it up and they can take a look at it. The last thing I want to talk about is on here. I have mind, body, and work. And anyone that knows me knows that exercise is a huge part of my life. And so you want to take time to take care of your body so you last a long time and you can stay in shape. Number 2, you need to take care of your mind, and that means meditating. If you can meditate while you do exercise, you do separate meditation, or however you get that brain rest, you should be doing that so you're fresh and ready to address your business. And the last thing is work. And what you need to do is find a balance between those 3 so you have time to do the other ones. Because we all know that at times we've been very busy with work and we end up not handling the mind and the body. Okay, with all that done, I would like to take some questions from you and answer them so that we can move forward with helping you even more. Anna and Rachel, are there any questions you would like to bring forward?
Yeah, there's a couple. I'll start with one of them. One is regarding personal planning. Should my business be in my revocable living trust?
Okay, very good. So first you have to have one, a revocable living trust, and you say, well, I don't have enough assets to have one. That's not a good reason, and we can have a separate meeting why that's not a good reason. So you should have a revocable living trust in almost every situation that you're in. Once you have that trust, you have to think of the revocable living trust as a treasure chest. And that treasure chest holds all of your assets so that something happens to you, somebody, the one you assign, can open that treasure chest and they can handle your affairs. Well, you have to put things in your treasure chest. By putting in the treasure chest, that means your corporation stock needs to be in the name of your revocable living trust, or your LLC ownership percentage needs to be in the name of your living trust. Your property needs to be in the name of living trust. Your real estate partnership interest needs to be in the name of the living trust. Some items don't go in there. Sometimes 401ks and IRAs don't, and they go directly to a beneficiary. And this lawyer will help you with some when you contract a lawyer to do your revocable living trust. But the answer is yes, you should. Next.
Okay, should I lease or buy business equipment and vehicles? If I purchase, should I try to buy for cash or should I finance, take a loan?
Okay. So should I lease or buy is the original question. And that depends on a couple things, your credit and then next the deduction. So let's talk about the credit. Sometimes leasing is a very easy way to qualify. Sometimes they cost a little bit more if you figure them all out. But a lot of times there's a capital lease if they're equipment. Their equipment might be a dollar buyout. So it's a little bit like a purchase, but it has a lease, but you don't gain ownership until you buy it for the dollar at the end. But it's a very easy way to get into something versus a purchase where you're going to either buy it for cash or finance it. And so financing sometimes takes some more documents to be able to qualify for. But oftentimes, you can get a better rate or there's less cost of the capital. So that's first of all what to do. So it depends on the situation. I have leased assets over the years and I have purchased assets. I like purchasing a little bit better, but either one is okay. Now, if you purchase the asset, you can take an upfront deduction normally as a piece of equipment in your business. And if you lease and you buy with a $1 buyout, that's called a disguised purchase to the IRS. And you can also take a one-time write-off and you turn it into interest and principal on your books and records and can do it. But if it's a fair market value buyout, then it's a true lease and you deduct it like rent. What was the second part of that question?
The
Did I
next
answer the whole
question,
thing?
the second part. If I purchase, should I try to buy for cash or should I finance by taking some loans?
Okay. So of course this depends on the cash flow that you have, but I'm a big advocate for preserving capital. So unless you got a lot of money set aside and you're not using it, I like the financing generally. And then when that asset is earning money for you, you maybe can pay it off faster to make sure that you have the cash flow to do it. Because I've seen it too many times where someone will spend anywhere from 20 to 150 or $200,000 cash and then the business goes down a little bit, and then they realize refinancing that piece of equipment is not easy, and getting that money back is not easy, and they've kind of made a decision too quickly. The other thing is it's very important to try and match your deduction with the pay down of the asset. So if I buy it for cash as a repairer, I don't mind taking a full write-off on the first year because you paid for it in the first year. But if you finance it over 5 years and then you go take a full write-off in the first year, now you've got 4 years of payments for which you have no write-off, and it kind of moves cash flow away from the tax effect of it. And I don't really like that. You can do it, but I don't really care for that. So that's the answer on that one. Okay. Any other questions?
How do I forecast my business revenue and expenses when I don't know what next year will be like?
Think of a forecast of what you want it to be. Design it for yourself. So this is what I now don't, you can do three forecasts. You can do a pie in the sky, an average, and the worst case. Nothing wrong with that. Or two of the three, or just one of the three. But it's a roadmap. So just guess, just estimate. And that doesn't mean you have to estimate how much office supplies you're going to buy. You can use an average number from the prior year. You can do a lot of it very quickly. What, of course, we want to do is get an idea if we think there's going to be a problem or not next year based on how things are going or what's scheduled out for the future, if you can know it. If you have a business that has a repeating business, then you have a little bit easier time doing that. If you don't, you're waiting for new jobs to come in. Well, based on the number of people you have employed, what new jobs do you need to come in to pay those people? Otherwise, you're going to have to lay them off. So maybe start with that and then do a second one. If I don't get all this business, what am I going to do about it? When will I run out of cash? And what should I do about that now? Should I market more now or not? When I can take care of that. Okay. Any other questions that are out there?
There's a few others, but they're a little bit more specific to each attendee. So I think we can answer those directly and later offline to that specific attendee.
Okay, well, great. All right. Well, then, unless somebody has a question immediately that's going to come up, we've achieved the goal. We've achieved it in record time, and I think that's good.
I would
Hopefully,
love to share where clients can go on our website and find some of these spreadsheets.
yeah, the personal spreadsheet, for example. Go ahead.
So you can go to bernsteinfinancial.com/resources, uh, or you can go to this menu right here and find the resources button under the clients tab. And then we have a plethora of spreadsheets that you can download. Mike reviewed the financial forecast workbook right here. And we also have a YouTube video that you can watch to help you fill it out. And he was also referring to the cash flow and retirement planning workbook, which is for personal planning. And I'll pull that up in a moment. But you can download it for yourself um, at your convenience.
So here's the personal cash flow spreadsheet. And if you use this, there is a tab to the left that talks about instructions. Read those instructions because it makes it easier for you and it also makes it more useful. And I'll give you the biggest hint of those instructions are to make all expenses monthly, even if you pay them 1 or 2 times a year. You divide by 12 and make it monthly so you know what your monthly outgo is. You say, but I don't spend that monthly. I spend that once a year or twice a year on property tax. That's okay. You should be setting it aside every month so that it's available to pay in twice a year or once a year, especially if your cash flow is tight or your negative cash flow to understand what cash you need along the way. Otherwise, you get to the property tax, you end up borrowing the money, right? So that's not what we want to happen. Great. Thank you, Asia Blue.
There's just one more question maybe I can ask. Is that all right?
Yes.
Okay. What's your advice for business owners in the healthcare industry in the wake of the slowing, decreasing reimbursement over time that are squeezing profit margins?
Well, I can think of two off the top of my head, and none of these, everything I've talked about, I talk about like it's easy. It is not. Every single issue I've talked about is difficult in business, and I know that it is for us, it is for everybody, deciding what to spend on marketing. But in that particular case, I would see two areas. One, can you widen the scope where you offer the services? If I offer services in California or LA, can I offer them United States wide? Can I offer them just in 2 other states? What can I do to widen and get some business from somebody else or another location to increase it? And then the other is, well, you might need to decrease the expense side to hold the line on the profit margin because your overhead ends up being too high if you get squeezed. And the last one, well, two more, marketing. If you're not marketing, you need to market. You say, well, I'm squeezed, I don't have money. Well, I can't help you go back and market before, but maybe it's worth borrowing money to market because marketing may bring in money that you were not getting from word of mouth or how else you're getting your business. And the last one is perhaps when the margin squeezes, you should let it squeeze and figure out how to get more volume rather than losing all the contracts. Now, I know how it goes, and especially in construction, if you turn down contracts, even if the margin has been a little bit too low, you end up not having enough money for cash flow to even keep what you're doing, keep your basic overhead and basic crew. So a lot of construction companies end up taking on business with very low margins just to keep their people busy during low times. And that may have to do. But I remember talking to someone yesterday, just yesterday, saying, you know what, you do all your work in the LA area. I think you need to look United States wise and fly somewhere and do other work somewhere else and be away from home a little bit in order to handle these hard times. Hopefully that gave you some ideas. Anna and Rachel, anything else?
Not at this time. Nope.
Okay. Well, back to Asia Blue and to wrap it up. And thanks everybody for attending and anyone new looking at this. Let us know if you have questions.
That concludes today's Small Business Owners Bootcamp webinar. Please visit our website at bernsteinfinancial.com to visit our blog, review our resources page, and to schedule a consultation with Mike, Anna, or Rachel for a tax, accounting, bookkeeping, or business consulting services. Okay, have a wonderful weekend.